Good day to everyone, and as always, welcome to our weekly market update by SC Securities Research. As always, we'll be looking over some of the main highlights for the stock market over the past week and some of the macro news affecting the country, as well as looking at the secondary market, the global commodities market, and what actually happened in the global market as well. So this week, actually, we only have three working days for the week, Monday, Tuesday, and Thursday. Wednesday and Friday, the market is closed on these days. So in terms of the actual stock market, we saw that this week also, despite it only being 3 market days, the bullish momentum continued, with the all share actually rising by 1.42% this week, whilst the S&P rose by 0.34% this week. The all share actually closed on 8,137, capping off another great week of gains, despite the foreign sell-off that still continues to happen in the market. Turnover has been quite huge, and compared to the last few weeks, quite substantial. And on a positive note, I mean, despite the fact that the foreign sell-off has been occurring, most of it, or pretty much all of it, has been collected by the local players, which is why we haven't seen the market actually go into the red zone. And coupled with the fact that index-heavy counters have further attributed to gains, especially this week, I'm pretty sure that everyone would have noticed EXPO led the charge, starting at somewhere in the mid-50s and finishing off at around 67, if I'm not mistaken, this week. So overall, the market remains buoyant and positive for the moment. However, we must stress that the macro factors, as always, do not seem to be coinciding with the bull run. So in terms of some of the macro news affecting the market this week, we see that the country's sovereign rating has been placed on review for a downgrade by Moody's. So the rating agency has cited the weak external position and decreasing institutional strength, as well as basing their rationale on the fact that the country has an increasingly fragile external liquidity position, which actually raises the risk of the country defaulting. Now, this statement isn't new news to the players inside the market and most people who have been updated with most of the news. This does confirm most of the fears that we have, given that the government has a severe shortage of forex earnings. Now, in the prior years, especially prior to the Easter attacks, most of the FX earnings came from foreign remittances and mainly from tourism. However, since the Easter attacks, as well as the pandemic coming into effect since last March, tourism has pretty much ground down to a halt, which means that a huge portion of the government's forex earnings has been stifled. So given that there has been increased quantitative easing by the government in order to stem some form of economic recovery, which has actually put a downward pressure on our currency, coupled with the fact that we are not getting enough forex earnings, it seems that the government's only solution is to inevitably turn towards an IMF bailout. Now, the conditions of those IMF bailouts is still somewhat to be debated about. But it is something that the government is increasingly having to explore as its only option moving forward, due to the fact that the Delta variant is also causing more hiccups in terms of an economic recovery and in terms of boosting tourism on a global context, not just on a Sri Lankan context. In other news, Sri Lanka's balance of payments deficit actually hit 1.1 billion for the first 5 months up till May this year. This is on the back of continuous money printing, whilst the trade deficit actually exceeded 2019 levels, despite import controls being in place. So that is very worrying. And in terms of other news, LAFGAS PLC stated that it had actually halted the importation and distribution of liquefied petroleum gas, or LPG, imports, as the authorities had denied requests for a price hike due to soaring raw material costs. Now, this was something that LAFS had lobbied for ever since the fuel price hike had happened. However, this hasn't come to fruition. So this is still very much a developing story, but something that we do need to keep an eye out on. In terms of our secondary market news, we see that the bond auction held on the 19th of July failed to actually sell 27% of a 64 billion treasury auction, despite a 1 basis point de facto policy rate, which served as a price control. And additionally, the Sri Lanka Debt Office said that it is seeking to raise up to $110 million in terms of an auction where development bonds will be auctioned off. The auction will be closing on the 27th of July, and bids can be made for 9-month, 1 year, 8-month, 2 year, 9 months, and 5-year bonds. Outlook, we see that oil prices actually had slumped earlier this week. However, it actually rose by 0.4% on Thursday, and it actually continued to rise on towards the end of Tuesday as well as Wednesday, extending strong gains made in the previous session. And this was primarily on the back of tighter supplies until the end of the year as economies recover from COVID. Now, despite over the last couple of weeks, OPEC plus, that is the OPEC countries plus Russia, agreeing to increase the supply. So they've agreed to increase the supply by 400,000 barrels per day. Demand still remains on course to actually outweigh supply, thus putting an upward pressure on prices. Aluminium prices actually fell this week as China plans to release 90,000 tons to the market on the 29th of July. With that in mind, we would see some further selling pressure come into play as we move forward. And gold saw a slight dip this week as investor sentiment grew on positive corporate earnings releases, despite lingering fears of the Delta variant and inflation. And in terms of the global market news, global markets actually rally behind the strong earnings release season of the US and in Europe. However, this may not be long-lived. Now, in terms of an Asian market picture, Asian stocks rallied towards the end of the week. The MSCI broad index of the Asia Pacific shares outside Japan followed Wall Street and rose by 1% with gains from Sydney, Hong Kong, and Seoul. The Japanese markets are actually closed till Monday. The European stocks also extended gains for a third straight session by Thursday, driven by strong earnings release seasons, coupled with the expectation that the European Central Bank will stick to a very lenient or dovish policy stance to further bolster overall market sentiment. Pan-European stock 600 actually rose by half a percent, and the index closed 1.7% higher on Wednesday, arresting some of the slide it had seen earlier during the week due to sharp sell-offs. Despite these gains, experts still maintain that the overhanging cloud of the Delta variant as a going concern for the long-term economic recovery, as it still does put much uncertainty into the market. These are the major news highlights this week. And as always, I will hand it over to Harin, who will take you over the technicals pertaining to the all share. And
Thank you, Nuwan. So we were able to see how the index closed at 8,136.76 today. And basically, previous February 15th high was tested, and then thereafter we were able to see somewhat around 6 points the more market went up. So the next daily resistance is at 8,250, 8,300. So if by any chance from this key area, so we know that February 15th high is a very crucial area, because last time also it went up to that level and then the market went down. So if it sustains above this 8,130.17, if the index sustains over that level, we can expect the daily resistance of 8,250, 8,300. Else, from this area, if there's a continuous rejection by in coming week, the index could actually come down to the daily support of 7,950, 8,000. So here we can clearly see how the index has been moving in a bullish momentum over the past few days. So here we were able to see at first it touched the daily resistance 7,950, 8,000, and thereafter it came to the daily support of 7,650, 7,700, and breaking that resistance level, making it a support. Here we were able to see the index broke out and retested Here we have a bear candle, retested making a low of 7,964.01, and thereafter we were able to see the index moving upwards to the February 15th high. So now that it is in above the 15th February 15th high. If it sustains above it, the daily resistance of 8,250, 8,300 could be expected. Else we will be able to expect somewhat around a higher low formation to the daily support level of 7,950, 8,000 again. With that being said, the current RSI is at somewhat around 80.95. And that's very crucial at this moment, because the RSI being 80.95 indicates a bit of overbought and above this about in this situation. So moving ahead, we have Alumax. So looking at Alumax, we were able to see higher high formation being made in June 10th, and we had a higher low formation somewhat around in July first week. The price went to a level of resistance 14.9, 15.1, and we were able to see today the closing was 15.1. So looking at the EMA levels, we can potentially see that the price is actually in a bullish trend. But since there's a gap between the moving average, so here we have clearly a breakout gap. So here we had a previous resistance, and then there was a sudden breakout, and the price went to the level of daily resistance 14.9 and 15.10 in between. So that region. So RSI is 76.52. So this means that the stock is quite at this price level, the stock is quite overbought. Since, and also with that being said, since there's a major gap between the price and the moving averages, there could be, will be able to expect somewhat of a higher low formation over here as well, because we were able to see last time it made a higher high and then touched the trend ascending trend line again, and here we have another higher high. So by any time soon it could actually come down again to the daily support of 13.9, 14.1. The other thing is, if price manages to go further upside, basically closing above the 15.10 by next week, we'll be able to expect the next daily resistance of 15.90, 16.10. So this scenario would apply only if the price continuously reject from 14.9, 15.10 and come down again to touch the ascending trend, and also make a new high low formation in the ascending trend. So if another breakout occurs above 15.10, the next daily resistance of 15.9, 16.10 could be 16.1 could be expected again. Thank you. Over to you, Nuwan.
As always, thanks, Harin. And as always, you guys can see this on our YouTube channel, as well as please do follow us on our other medium platforms. As always, this report will be sent across to our client base, and we wish you all a very happy weekend, and catch you all next week. Thank you.